We're also tracking earnings coming from EV maker Rivian. This coming just yesterday, Lucid reported a wider loss than expected. It's a similar situation with Rivian, adjusted loss of $1.24. That's wider than what the market was looking for. The sales growth, however, was higher than expected. And we're talking about, call it 80% sales growth from last year. In many ways, they are just kind of ramping up here. Perhaps what's keeping a lid on the stock here is the production forecast. They're sticking with their production of 57,000 vehicles for the year. The market was a little bit higher, but as I understand it, that's a big key to the stock, less about sort of the financial metrics and more about their ability to ramp up production after a recent manufacturing pause. Remember, Rivian, like some of the other EV makers, engaging in a round of job cuts. So they've got two things. They've got to try and bring costs down at the same time that they've got to try and get new cars on the road. And like Tesla, they have been working on a cheaper car. Right now, their R2 is around $45,000 US. They've got a new vehicle that they say could be even cheaper. Let's bring in Tom Narayan, who is an analyst with RBC, covers Rivian and other EVs, and covers Rivian with a neutral rating at RBC. Tom, thanks so much for being with us. What jumps out to you in these results? What were sort of the metrics that you were looking for, if any, or is it really just about, okay, when is your production going to get to maximum capacity?
Yeah, it's really about the guidance and about production. Some people may have thought that they could raise it. I wasn't expecting them to raise it. They only issued it very recently. 57,000. If you look at the Q1 numbers, it looks like EBITDA was a little better, but then gross profit was worse. These are loss numbers. It's difficult to parse through it, but it is important to, if you annualize, for example, the EBITDA number, their guidance for the full year was a negative 2.7 billion. And it looks like they posted a better number than what the street was expecting. So maybe that could give people some hope. They've said that they would pare losses by the end of the year. So if it gives people reason to think that losses would come down as the year progresses, maybe there's something positive there. But yeah, production guidance kind of the same. Really unclear to see if there's anything that significant. We have to see what they say on the earnings call about R2, like you pointed out. That's really going to be very, very important. That's a low-cost vehicle that they're effectively, reducing production of the R1 for, and using the same facilities, production lines, to make that R2, which starts production in H1 26. So really, people are going to be looking to that. But I'm sure people are going to try to get some information on their cost controls and if they can reduce those losses.
Yeah, you're right. They're now saying the loss will only be $2.7 billion. The market was looking for a loss of $2.9 billion. So we're really only better, I guess, at the margins. But, $200 million, I guess, does count. I guess when you're talking about losses of this magnitude at a time when you're trying to ramp up production, is that completely understandable, right? They are trying to get to scale, and that's going to require burning through cash. Do they have the balance sheet to withstand that?
Yeah, that's absolutely right. I mean, you also saw this with Lucid yesterday and with Tesla when they started out several years ago, right? So early on, you're going to have to take losses because you're not at max capacity. EVs are expensive to make. Rivians are very expensive to make, as you can see. Specifically, these are very highly engineered vehicles. Even though they're sold at a high price point, they're losing a lot of money on these. And so you need the volume, you need the scale to maximize the capacity utilization of these plants. So it is understandable for sure. But to your point, liquidity, they say, one of the things they did, instead of making the R2 at the new Georgia facility, they're going to make it at their existing facility. That was going to save something like $2.5 billion. So that gets them, as they say, to have liquidity that lasts them through H1 26 when they start making the R2. So, they do have liquidity for some period of time. But yeah, look, we're in the middle of an EV slowdown too.
Yeah.
So, we have to see how long this can last, really.
I mean, at the same time, their sales are growing, and I get that it's from a low base. The stock recently hit an all-time low. What is the bar very low for a Rivian to outperform, I guess is my question, compared to a Tesla, which you do have a buy on?
Yeah, absolutely. This is a name that if they beat that, or if they raise their guidance, you would see a huge up move in the stock. Absolutely, because expectations are so low. And with Tesla, it's had a bit of a run, right, the past few weeks since results. I still think there's more upside there. Otherwise, I wouldn't have a buy. But yeah, you're absolutely right. I think Rivian, if there was something positive, it would be met very well by the market. But there's a reason for that, right? Why are expectations so low? It's because it's more challenging. Tesla was able to start out when they were the only game in town for EVs. They're profitable. Rivian's now really trying to make a push. The R2 is going to go right up against legacy players, Jeep and GM and Ford, Bronco, and legacy guys are making EVs now, and they have to face Tesla. So it's a lot harder for them. That's why the expectations are lower.
How much stock did you put on reports? And I think this was a Taiwan-based organization that reported that Apple could be exploring a partnership with Rivian. Would that make sense to you that Rivian would be looking to some sort of partner to kind of get scale, to help them with this, this manufacturing issue that, you keep coming back to?
Yeah, I mean, Rivian's been talked about in the press a lot, and we've written about it as a company that potentially could partner with somebody. It's been discussed that potentially another automaker who wants a presence in the U.S. in the SUV and pickup truck space, maybe a Chinese OEM, right, who wants to be in the U.S. or Volkswagen has their Scout brand they're trying to make, and people always talk about them potentially. I mean, Stellantis has Jeep, potentially this part. I mean, it's always been circulated discussions. Rivian is a great brand, right? And it's difficult. The hardest thing to do is make the brand that people want, and they've done that. It's just there's a liquidity issue and a logistical issue. So certainly it wouldn't be surprising that there's maybe discussions going on. But with Apple, remember, there's a history of them announcing things and then things not happening in autos. Autos is a very difficult space. And it's one that, if you're Apple, you want to have really high margins. Autos are not a very high margin business. So unclear about that one. But certainly it's been discussed a lot that there are potential partners, specifically in the auto space, for companies who want a presence in North America for what they do. That's definitely something that we've heard about.